In fact, a lot of the developers have moved from that industry into the AI industry. But I do think about this a lot. I've got a few startup friends who are getting a little bit nervous and are raising a lot of money now because they think that in the next couple of years, maybe in the next 24 months, there's going to be a big market contraction when investors who invested in some startup idea that had a $100 million valuation realize that they're losing their money. And some domino usually falls in the market. Some catalyst moment means that there's a contraction. Stock markets go down. It gets really hard to raise money.
Yep.
Clients who you might be relying on now to pay your advertising budget start to lower their budgets. And in such a scenario, you're going to want to wish you'd prepared a little bit. Some people are.
This is part of the cycle. The cost of capital for bubble companies, we'll call them. I don't love the term bubble, but for companies who are in the industry that becomes the focus of a technological revolution. So now we're talking about AI. The cost of capital gets really low, which means asset prices get really high. And a lot of people want to invest in that space. But those asset prices are not typically sustainable, and they do tend to come down. Does that mean a total market collapse or catastrophe or panic for diversified investors? No.
Oh, is the writing on the wall?
I don't think we can say that. If the writing were on the wall, the way that I view financial markets is that if the writing were on the wall, prices would reflect that today.
Okay.